Well, good morning, everybody. We are going to embark upon a fantastic nonprofit journey this morning. I think that there's some stuff that you guys already know, but we're going to go over it anyway just so we do a comprehensive approach. And that's it. We will get started here. So, a disclaimer that this video is for you guys and you guys alone. You can share the information, but, be careful when you're sharing information because, this information is I'm going to design this talk based around what you guys are doing. So when you're handing out other information, it might not be pertinent to their particular organization. So the first thing we're going to talk about is there's an awful lot of different kinds of charities, and not necessarily charities, but 501c organizations. There's 29 different subsections of the 501 subchapter C, and then there's probably 5 or 10 additionals that don't kind of fit the 501c structure, but are there. So the most typical that you'll see all over the place is 501c3s. There's more 501c3s in Tucson, believe it or not, per capita than any other city in the world. Tucson is a very, very charitable place. 501c1s are credit unions, so you might think of, Davis Monthan or what's now Vantage West Credit Union, or Tucson Old Pueblo Credit Union, some of those guys. Social welfare organizations, so Rotary clubs are 501c4s, so it would be a Lions Club or the Kiwanis. They usually have foundations that are 501c3s that you make contributions to, but the actual clubs themselves are 501c4s. Real estate boards, Chamber of Commerce, 501c6s. Fraternities that you might see on the University of Arizona campus would be a 501c10. Water cooperatives like the Vail Water Company or Arvaca.com is a nonprofit that I run with a few other people. And we give wireless internet service to people who don't have access to cable internet, so that's a 501c12. But essentially, 501c3s, contributions are deductible, and a lot of other organizations, no. Fraternal society contributions are deductible, but that's really going to be typically it. Obviously, the most common is a 501c3 organization. So how do you start a 501c3 organization? And you guys have already been through this, but we're going to talk about it anyway, make sure that everything was done correctly. So the IRS is the only organization that grants exempt status to a 501c3. So when you start or begin a nonprofit organization, the first thing that you do is go to in this state, Arizona Corporation Commission, and start a either member-managed or manager-managed LLC. You can start a corporation, and then Arizona also has a nonprofit designation, but that doesn't mean anything. It literally means nothing. So typically an LLC is the route people go, or a corporation if it's going to be a great big nonprofit. So like the Ironwood Pig Sanctuary is probably a corporation because they do millions of dollars in revenue. After you file your LLC paperwork or corporation paperwork, you still have to publish that you've started a company in any journal or newspaper. You have to file that annual report for $10 every year, just like you would for any normal corporation. With that annual report, of course, you would update your officers, directors, any addresses if any of those people had moved. And on the Arizona Corporation Commission website, you can actually sign up for email notifications so that you don't miss those. Sometimes if you aren't paying attention, Arizona Corporation Commission will dissolve your company if you haven't filed those reports. And then you've got a great big bowl of worms that you've got to deal with. So it's really important to file that annual report. If you guys have questions, raise your hands. I'm watching you guys too. So after you form your LLC, now it's time to apply for an application for an EIN. So you can actually go online and file the SS4 as the form for an EIN. You can file that online, which literally takes 2 seconds and it's free. Or you can file Form SS4 snail mail. It takes about a week under normal circumstances. Under COVID circumstances, it takes probably 6 weeks to get your EIN back from the Internal Revenue Service.
That was probably the easiest part of this process.
Yes, without a doubt. So applications for exemption then, Form 1023-EZ is now the preferred method of applying for exempt status with the Internal Revenue Service. It used to be that the 1023 was about a 25-page form. I used to charge $1,200 to fill out that form because it literally took weeks to get all of the information and you know, get that thing filed correctly. Form 1023-EZ now takes, I don't know, 20 minutes, half an hour. It's really not a big deal anymore. I filed one about a week ago. I don't know that I would charge more than $250 to file that form at this point. So
Chad, I have a question on that.
Yeah.
So on the EZ form, is it income eligible? So I was trying to decide or decipher between the EZ form and then the regular one, which is like 23 electronic pages.
Yeah.
So if you have more revenue than a certain amount, do you not qualify for this? Because that's the stage we are at right now.
That's correct. Have you filed the 1023 already?
No, I have not filed it because we're working as a board of getting all the layers of how it was going to play out as far as what we were doing and income, got our mission statement, but I wasn't sure if we qualified for the EZ or not.
I think that you're going to qualify for the EZ for the time being.
Okay.
And then you can grow after that. I don't think that you need to file the long form. Like I say, the IRS prefers the EZ form, and
Nice.
rather have you have your exempt purpose or your exempt status in there quickly.
Okay. Thank you.
Foreign origins, if your nonprofit is, say, stationed in Mexico, you don't qualify. But yeah, almost everybody can file the 1023 EZ. 1024 is for all of the other 501c types like the C4, the C29, C10. Those types of organizations cannot use the 1023 EZ. I think you guys are fine. So what kind of tax returns do you need to file with your exempt organization? Religious organizations, churches are not required ever to file an income tax return, believe it or not. Even the mega churches in Colorado Springs and that sort of stuff, they are not required to report anything. 990PF is for private foundations. 990N has 8 questions. It's super easy. You can actually go online and do it for free. But that's if your regular receipts are less than $50,000. 990EZ is the next step up from the 990N. It's if gross receipts are greater than $200,000 and assets are less than $500,000. The 990 long form is a very difficult income tax return. It's when gross receipts are over $200K and or assets are over $500,000. The 990T is an additional filing requirement for UBIT or Unrelated Business Income Tax, which we're going to talk about here in a little bit. 990 forms are due the 5th month after the close of their fiscal year. So if they've got a calendar year, when they run January through December, they're actually due May 15th instead of April 15th. You remember, Tina, that your corporation is actually due March 15th because they want you to have your K-1 so you can file your individual return. But the nonprofit return, they try and give a little bit of extra time to file. So they're due May 15th. And again, if you're running on a fiscal year, so say that your fiscal year ends June 30th, you've got 5 months. So July, August, September, October, November 15th would be the date that that return would be due before extension. You can also request a 6-month extension with nonprofits. UBIT is a very important topic for nonprofits. Even though an organization, I'm literally going to read this word for word because when I wrote this, it's all very important. Even though an organization is recognized as tax exempt, it still may be liable for tax on its unrelated business income, or UBIT. For most organizations, unrelated business income is income from a trade or business regularly carried on that is not substantially related to the charitable, educational, or other purpose that is the basis of the organization's exemption. So an organization that's exempt that has $1,000 or more of gross income from unrelated business must file Form 990T, and that's in addition to a 990EZ or 990 long. If you have a 990N where your receipts are under 50 grand, you still have to file the 990T, which actually makes you file the 990EZ. So that's really important to know. Let's give you some examples. So let's say that you've got an exempt organization that's close to the University of Arizona, and during games you rent out a parking lot. Is that part of your exempt status? Nope. So any revenues that you would receive from renting out that parking lot are subject to UBIT. What if you have a physical location where your exempt organization has purchased and you're mortgaging, you rent out space to an unrelated tenant? And this happens down in Amato. If you know where the Territory Inn is, there's the Church of, I think, Religious Sciences down there. They've got a big church building, but then they've got all the outbuildings that they rent out to Christoph's restaurant and, you know, all the retail spaces that are over there. All of the income from that is UBIT, and they've got to file that 990T. Let's say this happens in like Seattle and Portland on a regular basis. You're operating a soup kitchen for the homeless, but there is interest in the community for you to sell your food. Well, the soup kitchens in like Portland and Seattle are serving really, really great food, and the hipsters want to go and eat their food. So as soon as you start selling that food to the public, that's UBIT, subject to UBIT. So with UBIT, it's the same thing as, you know, running any business. Your gross income minus expenses equals your profit, and your profit is what you're going to pay income taxes on.
So if we had a children's building and we are renting out space, then for different organizations to participate in the use of that building, so that would be UBIT?
Potentially, depending on what your exempt purpose is.
Right, gotcha, okay.
So if your exempt purpose is specifically to own a spot to rent out to different organizations, if that's what your exempt function is, then it's not going to be UBIT.
Gotcha. Okay,
but if you're operating a soup kitchen and then renting out a space, those things are going to be very different.
Right.
So it's really, really important. Again, that was one of the reasons why the 1023 used to be 25 pages long, is it's really important to include everything that you're going to be doing in your exempt purpose. For example, there's an organization down in Aravaca called the Aravaca Action Center, and they run a preschool out of the back of the building. There are 2 hotel suites in the building, and that's hospitality. But they get away renting those things really cheap, essentially, to help pay their mortgage and for the preschool. They do art shows, and they have local artists art all over the walls, and their people who are running the rooms can purchase that art. They do sustainability. So on the property, they've gone outside and they planted a lot of edible trees and bushes and shrubs and that sort of stuff. So they teach, you know, conferences into sustainability on a regular basis. And then the other thing that they have is health and wellness. So there are yoga instructors and Pilates instructors and masseuses. I don't know what the plural is for masseuse. Masseuse? I don't know. Anyway, they'll go in there and give massages and you know, help people out. And all of those things are part of their exempt purpose because we designed all of those things to be their exempt purpose. However, if they were to start selling beer and peanuts or something before a football game, that would be UBIT. Or if they rented out their parking lot all of a sudden, the community center, that would be UBIT. Questions? I know that that's a lot to chew. Janelle, you're muted. There you are.
Sorry, please forgive me. You said that we could grow later, so that if we added something later, we could change our filing, or no?
You really don't want to do that. You can. You want to, again, the reason that the 1023 form used to be 24 pages long is because you really need to sit down and think about everything that's going to occur. You really want to have all of your growth planned before you form the nonprofit and where you expect to go, and have all of those functions built into the 1023 when you file it. That being said, you can go and there's another form, and I don't know it off the top of my head, but there's another form where you can actually inform the Internal Revenue Service that you are including new things in your exempt purpose, but it's a pain in the keister. It's much better to plan ahead and have all of those things said and done. You know, you're opening up the door for a UBIT audit by doing that. Make sense? Okay.
Thank you very much.
Absolutely. So again, do all forms 990. So the 990N, the 990 PF, the T, the long, the easy, all of these forms are due the 5th month following the close of the business year on the 15th day. So again, just some examples. If you close on June 30th, they're due December 15th. 6-month extension. If the exempt organization owes tax, the tax is due on the 15th day of the 5th month, and the extension doesn't count, just like an individual return. We file an extension for you on April 15th, the tax is still due on April 15th. Just because we're going to file in October doesn't mean that you can't pay your taxes. It's not an extension of the tax due date. That's very important to know. You need to be able to have good enough records to be able to pay the tax. And we were talking about penalties a little bit. If an organization whose gross receipts are less than $1 million for the tax year, it's going to file a 990 long, right? If the return is late, there's a penalty of $20 a day. Maximum penalty is 10 grand or 5% of gross receipts, whichever is less. If the gross receipts are over $1 million, penalty is $100 a day, still limited to 10 grand or 5% of gross receipts. An organization that fails to file the required Form 990 for 3 consecutive years will automatically lose their tax exempt status. So you'll actually find that even though churches are not required to file a 990, a lot of them or many of them still do, so that they don't lose their tax exempt status. It's not a bad idea to file that anyway. But you'd be shocked to find out how many corporations or nonprofits lose their tax exempt status because they change treasurers and the treasurer doesn't know what's going on. They don't file the annual reports and they stop filing the tax return because they don't think they need to because there's no profit. So make sure that you're always filing that tax return. Because of the penalties, there are reasonable cause penalty abatements, just like there is in corporate income taxes or individual income taxes. So any sound reason, file casualty, natural disaster, other disturbances. Right now, I'm kind of waiting to see if the IRS is accepting COVID as a reasonable reason not to file an income tax return. I kind of doubt it, but we're going to see. You would think that an international pandemic would qualify, but we're going to find out. Death, serious illness, and incapacitation should qualify. Other reasons that establish that you use all ordinary business care and prudence to meet your federal tax obligations. Documents that you may need to prove that, any hospital or court records to establish illness or incapacitation, documentation of natural disasters, or anything that prevented compliance. So as with anything related to the IRS, the more documentation that you can procure to defend your position is very important. Additionally, they're not required to abate any penalties. I had a client that paid a professional tax preparer in another city to file their income tax return. They had signed the return and they had copies of the signatures that they had on the return. The tax preparer gave them a copy of the return. They paid for the income tax return preparation and had a copy of the canceled check. The tax preparer prepared a letter for them that was signed that said that he didn't file the tax return, that he overlooked it. The penalties for not filing this return accumulated and grew greater than $5,000. We went to tax court over this issue, and the Internal Revenue Service tacked on another $3,000 to their penalties. They got charged $8,000, and it was no fault of their own that this return didn't get filed. So the point of my story is don't count on the IRS ever abating penalties. They can, and they usually do, but it really depends on who opens the mail.
Mhm.
You have a question, Tina?
Nope.
Okay. I've got another story about that I'll tell you real quick. Partnerships and S corporations, the penalty for late filing for them is $205 per partner per month. I had 2 clients come in within 5 days of each other. Neither one of them had filed a partnership return in 4 years to the date. Both of them were identical. Neither one of them had revenue. They were both in the same situation where they didn't think they had to file because they didn't have any revenue. So the penalties on one, the penalties were both like $24,000 for each corporation. We filed penalty abatement letters for both corporations. For one corporation, the IRS abated all $24,000 in penalties, first time. For the other corporation, we filed the exact same letter. They literally had the exact same timeline. Neither one of them had any revenue. They were identical situations. The IRS abated $4,000 worth of penalties and stuck them with the remaining 20 grand. And no matter how much we fought it, I wrote letter after letter after letter, and they did not abate any of the penalties. So again, don't count on penalty abatement, and it really depends on who opens the mail. It really, really, truly does. It can be scary. Nonprofits and payroll. So nonprofits, number one, the reason that I could talk about the Arabaka Action Center or the Church of Religious Sciences and Amato is because all of their information is public because they're a nonprofit. Anybody can request a copy of your income tax return. Most people, if you're bigger, if you're 990 long, you tend to post it online so that you don't have to give it out on a regular basis. Like if the Trump Foundation is one that, you know, my organism, my firm has been really interested in the last couple of years, right? There's a lot going on there. But anybody can call and request it, and you're required by law to provide that tax return to them. You cannot hold on to it and not give it out. So what you don't necessarily have to email it. You need to be, you know, safe in giving out your information, one thing or another. So you can upload it to a portal, or you can give them a printed copy of it, or they can view it on your website. But you do have to provide that income tax return. Why is that important? Well, if you have officers or board members that are receiving compensation, all of a sudden that information is now public as well. That can be a big source of problems in your organization. So the places on the tax return on a 990 long, anybody who's an officer, director, or trustee, whether they're receiving payroll or not, is listed on page 7. 990EZ, page 2. 990N, only the president or the person filing the income tax return is reported on the end. But in the 990 long and EZ, all of that information is going to be public, how many hours they're working a week, and what their compensation is for the year. So those are numbers that I've got to pull out of the books and put on that tax return. So if that's something that an employee of your organization doesn't want people to know, they're not a good choice. You need to find somebody else. Differences in payroll taxes. Anna Banana, I'm sure your mom called you that when you were little. You probably hated it.
Yeah, people still call me that sometimes.
I get a lot of Chadley. My son right now is calling me Chatty, which is a combination of Chad and Daddy, and he thinks it's hysterical, and I'm not keen on that. Anyway, 501c3s typically are not subject to FUTA, which is federal unemployment taxes. So you're still subject to FICA, which is Social Security and Medicare. Your employees are still subject to income taxes and state unemployment, but you do not have to pay federal unemployment taxes with a 501c3. So if you do, you'll get a nice letter from the Department of the Treasury at the end of the year, and they will refund your check if they're paying attention. With COVID, I wouldn't count on that. Using cash. So I am a big proponent for not using cash in your business for any reason, whether it's an S corporation or a C corporation or a nonprofit. I am big on not using cash, but sometimes we can't get around it. If you are using cash, all of your deposits are required by law to go in the bank account. If you receive cash, you may not go and spend it on supplies first before it goes in the bank account. It has to, when you collect it, it has to go to the bank before you can buy anything. Spending cash. And when you do make the deposit, no cash back. It's got to be 2 separate transactions. So you deposit it, walk away, come back, you can withdraw that cash or write yourself a check for cash, but no cash back. That's important. Spending cash. Of course, debit cards, ATM withdrawals, a check written to yourself on a distribution or personal funds. Using cash for business, and it's usually easier to have all cash purchases treated as if you're spending personal cash for the business. So you've got personal cash. That's probably the best way to spend cash if you need to do that. I've got a lot of clients who have been buying equipment on Craigslist, right? So what I have them do is before they go over and pick up the item that they're purchasing, whether it's a truck or a paint sprayer or a vinyl record, whatever it is, I have them print out the copy of the ad. I have them print out a bill of sale and a receipt. They take the cash over there. If they do an ATM withdrawal, they take the ATM receipt, they staple it there. They go and they purchase the item, have the seller sign the bill of sale, and then immediately turn around, go back to the bank and deposit the remaining cash in the bank from what they didn't spend. But then they have all of the necessary documentation, receipts and bill of sale and everything for the item that they purchased. Used stuff is difficult. Yeah. Some organizations have a petty cash account. The drawer should be set on a daily basis, just like in a restaurant. I don't know if anybody has worked as a server in a restaurant, but your drawer is set at like $123, and you've got X amount of pennies, X amount of nickels, dimes, quarters, 1s, 5s, 10s, 20s, probably no 50s or 100s, right? So if you're using a petty cash account, it really should add up on a daily basis. Any excess money that you receive should go straight to the bank. If your petty cash is depleted, then you should go to the bank and pull money out to restock that petty cash account. Make sure that you have good record keeping in there as well about who's taking money out of there and what for and all of those things as well. Personal money in an organization. The organization needs to reimburse you for any personal expenses that you accrue. So let's say that I'm Tina and I just happen to be driving by Ace Hardware and we need a new Cat5 Ethernet cable for Anna's new office because the dog chewed up the last one. Tina goes in, she spends cash, she comes home with that cord. The organization should reimburse Tina for that expense. Anytime you spend personal money, the organization should reimburse you for that expense. Anytime the business spends money on anything personal, I'm going to yell at you. That's called commingling. It's illegal. Don't do it. The business checking account should never, ever, whether it's an S corporation, C corporation, or nonprofit, should never, ever, ever, ever be used for any personal expenses. If you're like me and you've got a PayPal account in your business and you accidentally order pool chemicals on the wrong account, then you need to reimburse the corporation for the pool chemicals that you purchased personally. That happened to me 2 weeks ago. It was incredibly embarrassing. I did it out of my Rotary account. I had to explain to my whole board why I accidentally bought pool chemicals. A note about reimbursements. Again, personal funds used for business expense, corporation owes you money. Corporation should write you a check so there's a paper trail. They should not reimburse you cash. Reimbursements can be grouped as a whole, so you can reimburse on a weekly basis, a monthly basis, a quarterly basis, an annual basis. So Anna, you guys already have a reimbursable expense plan that we put together for you, right? For the S Corp? I think you do. Tina's nodding her head. So if you do, you're going to take that plan so that I don't have to create another one and charge you money, and you're going to adapt it and adopt it in the nonprofit so that you can reimburse those expenses. But you need to have a plan on what you're going to reimburse for the nonprofit. So if someone has to go to Phoenix to pick up supplies, but the store is closed, they're not going to turn around and come all the way back to Sarita necessarily. They might stay in Phoenix. So you might reimburse them for their hotel room. You might reimburse them for their mileage. You might reimburse them for their food. But what if they decide that they want to go to a bar and buy everybody $400 worth of drinks? Are you going to reimburse that? Probably not. But you need to have that in writing ahead of time. Otherwise, you can get yourself in a whole heap of trouble. So anything that you're going to reimburse, you need to have in writing. Anything that you're not going to reimburse, you need to explicitly have in writing. If they take a trip to Colorado, are you going to reimburse for marijuana? Probably not. You need to have it in writing. If you use business funds for personal expense, again, commingling, do not use the business account as your personal checkbook. In the case of an audit, if the IRS starts finding lots of expenses from your business checking account, they will remove entire categories of expenses from your income tax return. You are not entitled to an expense from the Internal Revenue Service. They are nice things that they allow you to do, but you are not entitled to them. If you've got poor records, they will remove tens of thousands of dollars of expenses from your return. All reimbursements need to be booked by 12/31. So say that I'm trying to reimburse stuff. If I wait until I'm on a family vacation or something and I wait and I don't reimburse until January, it's not deductible. I can't reimburse for that anymore. I've lost the opportunity to reimburse for that. That doesn't count for months. So say that I have expenses for August. I don't have to reimburse by August 31st or even September 31st. I can wait as long as I want to, so long as I reimburse by 12/31, but I cannot go over the calendar year. Like I say, there needs to be a reimbursement policy in print before you reimburse anything. So type of expenses, dollar limits, who is authorized to be reimbursed. And again, types of expenses are really, really important. I used to work for First Magnus Financial Corporation. I don't know if you guys know who that is, but they were the largest subprime mortgage lender in the United States when the subprime mortgage industry collapsed and they went out of business. So they allowed all of their branch managers and all of their banks across the country to reimburse anything. So these guys would go out and literally rent Ferraris for the weekend to take high-income clients out, and golf trips to Pebble Beach, and the charter jets, and just all kinds of stuff. Those things are all right as long as you have them in your bylaws and in your reimbursable expense plan. There's other people, David keeps us on a tight leash. If I go to a CPA seminar or something, my food is limited to $15 for the night. I can't go out and get a steak. I can go out to Burger King and get a number 2, right? That's about all I can do, and that's fine. Try to avoid reimbursements. I disagree. That's a David note, but I disagree. I think that reimbursements are helpful, but I think what he's trying to say is if the business can purchase things instead of an employee, it's better. Bank account documentation, all canceled checks, all receipts, you are required to have. Bank statements, credit card statements are never, ever, under any circumstance, enough paperwork and verification in the case of an audit. If you show up to an audit with bank statements and credit card statements only, you're going to lose. The other thing that you need to know is how are you receiving most of your credit card statements? These are credit card receipts or debit card receipts these days. Carbon copy, right? They come out of the gas pump. They come out of Manuel's restaurant, right? Everything is carbon copy. What happens if you're carrying around that receipt in your truck or your car in Arizona summer weather? That carbon copy receipt fades. Now you don't have evidence of your receipt. So email them to yourself, take a picture and email them to yourself, or make a Xerox copy of them, or scan them, or do something. I've got a couple of contractors that work in Phoenix, and they keep a cooler in their back seat with a waterproof bag, and anytime they get a receipt, the receipt goes in the cooler with the ice blocks that they put in there, the plastic ones. And that's how they do that, and then they get home and they give them to their bookkeeper. But yeah, I'm very careful with that. I don't need to explain debit cards to you guys, right? You all know how debit cards work. Some of my 70-year-old, 80-year-old clients I've got to explain debit cards to. Again, credit card statement, not enough IRS documentation. Keep receipts, keep receipts, keep your receipts. I don't need receipts when I'm preparing the income tax return. I trust your numbers, but you will need them in case of an audit. We were talking about buying things on Craigslist, right? A written or typed note. Make sure that you're saving the ad on Craigslist, printing it out, somewhere so that you have that. You might put it on a daily calendar. Again, the more documentation you have for things like mileage logs. If you have an appointment on your Outlook calendar and then you've got the address of that appointment and it matches your mileage log, that's going to put the IRS auditing your mileage log to bed almost instantaneously. Okay, he's got the calendar, he shows where he's going. Here's the mileage log. He's going to test a couple of those and then he's gonna move on. Mileage logs are very highly audited. If you have it on your calendar as well, you just put it to bed. And same thing with cash transactions or anything else. Profit and loss statement in a nonprofit also is like a statement of, the balance sheet is a statement of financial position in QuickBooks if you're using the nonprofit section of QuickBooks. And the profit and loss statement is, I can't remember what it's called off the top of my head. You do not need to use the nonprofit version of QuickBooks. I think it's actually more difficult than using the regular one. You can absolutely use the regular version of QuickBooks or QuickBooks Online to keep all of your bookkeeping. There might be restricted funds if you get a grant. They just need to be labeled as restricted funds on the balance sheet. To do that, you might have several checking accounts or savings accounts for those restricted funds. So you get a grant, you can only spend it on project X. Start another checking account until that project is done, and then you can go and close that checking account later. There's a lot of people who will try and keep track of those restricted and unrestricted funds in one account. Even as an accountant, it's very difficult to keep track of those things. And the books go sideways very, very, very quickly if you don't know what you're doing. So different bank accounts for restricted funds is my suggestion there. We talked about expenses a little bit, and this goes for any business. Oh, I thought that there it is. Business expense is an expense that's ordinary and necessary. So when I was growing up, my mom had some retail shops in Colorado, and she sold fur coats, mink and beaver, and that kind of stuff. If I am a traveling salesman, do you think that I can deduct a fur coat so that I can be warm in Colorado while I'm there? The answer is no, because while it is necessary, it's not an ordinary expense. Could I deduct a down jacket, which is still a $400 or $500 jacket? Yes, I can, absolutely. Another great example is if I'm a contractor, I can go out and buy a $180,000 Power Stroke King Ranch Edition, right? And that's going to be both ordinary and necessary in my field. Can I go out and spend $180,000 on a Lotus or a Ferrari? No, I cannot, because it's not ordinary and necessary. The truck is, the Lambo is not. Okay. Another way to think about business expenses is, will it add to the current or future profitability or success of your organization? So if I'm buying paper clips to, keep documents together, that's going to add to my future or current profitability. Toner cartridges or web advertising or my website or, an Office 365 subscription, anything like that are all going to be ordinary and necessary, and they're all going to provide some sort of value to my business. I've got a dog bed that I have on the floor, and I bring my dog to work a lot right now. That dog bed is not going to provide for the future or current profitability of my business. It was a personal expense. That dog bed is not deductible, as much as I would like to write it off. We've already gone over that. So your expense accounts in a nonprofit, I think that you can do the same way as, as we were talking about as a normal business. You still got advertising and promotion. Anytime you have auto expenses, period, you have to have a mileage log, period. So without a mileage log, there is no deducting any auto expenses for any reason. Not on your personal return, not on your S-Corp return, not on your nonprofit return. Without a mileage log, you may not deduct auto expenses for any reason, period. Bank fees, whether you've got a monthly fee for having a low balance in your account, or you have a return check, or credit card transaction fees are all bank fees. Customer costs, are you're not really going to incur in your nonprofit sector, but for instance, what those might be. I got a realtor in San Diego, and he's closing these huge homes. He's making $60,000 to $90,000 in commissions off the sale of one home. So there's times where his team is really good and they go to close a loan, and they might close it several weeks or even several months early. Well, the customer's still got a lease on another place, and they don't want to leave that lease and be paying for two places. So my client will actually go and he will pay out the remainder of their lease, $2,000 a month, $6,000 he'll spend. That's a customer cost, and then he gets them in their new house. So that $6,000 that he spent is absolutely deductible. You can use that on the corporate side, but you can't use it really on the nonprofit side. Customer gifts. Anytime you're giving a gift, the limit is $25 if you want it to be deductible, whether it's in a corporation or a nonprofit, period. If you're giving gifts between family members or something, there's a $15,000 limit this year, but that's different. If you have questions on that, talk to me. Commissions and fees, any commissions that you're paying for referrals or anything like that, dues and publications, professional publications, membership dues to, your professional organizations like union dues, or, even Rotary organizations. Any continuing education and development that you send any of your employees to, whether it be QuickBooks training, or if you were paying for this class, that would absolutely be education and development, anything like that. Any equipment purchases, of course, go on the balance sheet. Insurance is absolutely deductible. Officer life insurance gets a little tricky. Meals have become very, very, very difficult to write off. The 2017 Tax Cuts and Jobs Act kind of made it to where meals are no longer deductible. There's some very specific situations in which meals are deductible. Typically, for meals to be deductible, you have to be doing something like a retreat with your whole organization. Say that, who remembers the Rex Ranch? Nobody? All right, let's see. Let's say that your organization had a great year. You did a lot of great stuff for the nonprofit. You want to celebrate. So Tina whips out the old checkbook, and she rents out half a Star Pass resort. You guys go and you float around in the lazy pool, and there's food and cocktails for everybody. Have a great time. Under that circumstance, all of a sudden food is deductible. If you're taking employees out for a business lunch, it's no longer deductible. If you're taking a client out for a business lunch, it's no longer deductible. If you are doing stuff with a rental property and you stop for lunch afterwards, it's no longer deductible. So the answer on 90% of meals is that they're no longer deductible. You've got to be really, really, really careful when deducting meals. And meals are only 50% deductible. So if you spend $100 on a meal, you can write off $50. Also, entertainment used to be deductible. There was lots of people who would buy Wildcats tickets and then send their clients, right? Or the really private boxes at football stadiums, or courtside seats for, the Lakers or whatever those are, or the Knicks. So people used to buy those and then give them to their clients. So you can't do that anymore. Golf isn't deductible anymore if you're doing business on the golf course. None of those things are deductible. I think what you're going to find is that these organizations are going to start charging $30,000 or $40,000 for meals, and then the entertainment is going to be free on their side of the ticket. But again, still only be 50% deductible. I think that they're going to get around that here pretty quick. Office supplies is anything that you can think of. Professional fees. You got to be really careful with legal fees. Legal fees on a personal side, on an individual side, are only deductible for the preservation of income. So let's say that I am going through a divorce and I've got my business, and I don't want to lose my business because it's how I make money. Only the section of planning with my divorce attorney related to keeping my business is going to be deductible. If you have a lawsuit or something in your nonprofit or in your S corporation, your corporation, all of those legal fees are going to be for the preservation of income. They're going to be for the preservation of the corporation. They're always going to be deductible. Postage and delivery is self-explanatory. Rent and lease payments are both taxable and deductible. Sounds like we've got some things to talk about with that later. Telecommunications, if you're using your phone for a business, typically there's a safe harbor where your phone is 50% deductible. There's very few people that use their phone 100% for business. If they do, they typically have a business phone. So if you get a separate line for your business, then it's 100% deductible. If you're using your primary cell phone, it's only 50% deductible. And that goes across the board in any type of corporation as well. Travel expenses are deductible with some caveats. Utilities expense are deductible if they're, your place of business. You obviously cannot have like a direct TV account and have two satellite dishes, one at the office and one at home, and try to deduct your home utilities as well. That doesn't work. Wages and salaries are pretty self-explanatory. And then ask my accountant is just a plug. If you're doing a transaction, you don't know where to put it, you put it there and I come and clean it up later. There's something in QuickBooks called classes. I'm gonna get a sip of coffee. It got cold while I was talking. I'm gonna need to microwave it. So you'll see these foundations. It's like GuideStar, NavStar, that'll talk about the efficiency of different charities online. The highest ranking, I believe, is a 4-star charity. There's no 5-star charities. They just, for whatever reason, their classification stops at 4 stars. So what they want to know is how efficient your nonprofit is. How much money are you raising that actually goes directly back out to the community on your programs versus your management and general expenses, which would be salaries and rent and utilities and office supplies and all of those things, right? Those would be management and general expenses. And then your fundraising expenses would be, I'm putting on a bake sale or whatever it is. And my fundraising expenses are going to be the cost of the tables and the tablecloths and the runners. Maybe I rented chairs, maybe I rented tables, stuff like that. And then, all of the cost of baking the cakes if I'm paying for that. So flour, butter, milk, eggs, all of that stuff. So if 99% or 100% of the revenue that I generate goes back out in programs, I'm extremely efficient. If I've got a CEO who's generating $1 million in salaries, I'm not going to be quite as efficient. But you'll find that it's become a really big deal recently how efficient your nonprofit is. When you're looking for larger donors, they want to know what this is, your efficiency ratio. So in QuickBooks, you can utilize what's called classes to basically keep track of these 3 different things. And these 3 different things also show up on the income tax return. So they can request your tax return to find these 3 numbers out. So in your books, if you can kind of track those things ahead of time, you can figure out how efficient your own nonprofit is on a monthly basis or on a weekly basis without having to wait for the income tax return to be filed. So I really strongly recommend that you use that. Let me see if I can give you an example as well. Again, nonprofit books are public information. So I'm not showing you anything that would violate any confidence. And what I want to do is I want to show you a report of profit and loss by class. And then I want to see this. Let's see this year. So these are my classes. We were talking about the nonprofit in Aravaca. So this is the preschool, general, hospitality, membership, sustainability, wellness, not specified. So they have all of these different accounts where they're classifying their income and their expenses, right? Just like normal. We have net income at the very bottom. But I can see where my revenue and expenses are coming from for each program. So a lot of my revenue and a lot of my expense, or majority of my expense, is for the preschool. General is going to be all of my salaries and that kind of stuff. Hospitality, I've got some other revenue. But I can track all of these different things in this particular set of books, which allows me to have great information on several fronts. So using classes is important. Record retention, all transactions on all business accounts should be recorded in your books. We talked about cash. When you receive cash, the first thing that happens is you go and deposit it in the bank. Required by law. All credit card transactions, with QuickBooks Online now, you can set up everything to where the bank account transactions automatically stream into your account. You don't even have to populate them anymore. So there's really no excuse. What do you need to keep? Bank statements, copied canceled checks, credit card statements, retirement account statements if you're offering your employees retirement accounts, invoices and bills, all of the bills that you pay, all of the sales invoices for customers. The first thing that the IRS verifies when you're in the process of an audit is not your expenses, it's your income. They want to verify that you reported all your income first and foremost. So if you don't have sales invoices, where did all of this money come from? Where did you get this cash? Are you stealing it from a casino? Are you doing something illegal? Are you working with the cartels in Arizona? So it's really important that you have all of your sales invoices first and foremost. Then we worry about your expenses and having all of that stuff, but your sales is super important. Receipts, all receipts for business purchases, debit, credit card statements are not evidence enough. You need to have receipts for everything. A cash receipt for a cash purchase, your only proof. Anything else that you can derive for a cash transaction, like on Craigslist, put it on your calendar, take a picture, anything that you can do. We talked about mileage, and we talked about how there are no such things as an auto deduction without a mileage log. Here's a 20% discount on Mile IQ if you would like it. You can write that down. You can give it to your friends. Mileage is 58.5 cents a mile in 2020. It is a very large deduction and typically is one of the larger deductions on an income tax return. So you can use a smartphone app. You can do a spreadsheet. My dad always kept, I'll always remember when I was a little boy, I thought that he was crazy because every time we would stop for gas, he had this little book in the center console and he would get it out and he would write everything down, and he actually still does. Well, that's because he was doing a lot of driving. The company was reimbursing him for his mileage. I didn't know that. He still does it, and that's because he's trying to see if his onboard computer in his Lexus is keeping his efficiency and his fuel mileage correctly, and so far, so good. But at 74, he still keeps a mileage log for some reason. Can I keep only electronic statements instead of paper? Absolutely you can, so long as they're in a minimum 300 by 300 dots per square inch, or DPI. So I really recommend getting like a Fujitsu scanner. I think I use a 6170, but the scan snaps work great too. You just need to make sure that they scan at a minimum resolution of 300 DPI. Banks are only keeping statements available for 2 or 3 years at this point. So you'll find out that if you've been banking with somebody and you need a statement from longer than that, that you've got to go to the bank and they're going to charge you cash money to get your statement. Don't let them do it. Download it. Whether you're using, and your stored documents should be saved in a couple places. We'll talk about that, I guess, here in a minute. Don't let the bank be your record keeper. Make sure you're downloading those things. Do I still need to keep receipts if I have everything listed on one credit card statement? Yes, you do. I keep hammering that home. I hope that I hope that if you learn one thing, it's that. When is a purchase a deduction? A purchase is a deduction at the time you take possession of the item, not when you pay for it. Think about healthcare. If I receive a surgery on December 31st, when is that healthcare deductible? December 31st of 2020. It's not deductible when I pay for it. Sometimes I might put it on a credit card. If it's a big bill, it might take me 6 months to pay for it. I still deduct it the time that I receive the service, not the time that I pay off the credit card. Let's see, what else? Record all transactions with the proper date. That's the matching principle in accounting. That's important. Does my CPA need to see all my records when preparing my tax return? No, please no. Please, please, please no. That's called shoeboxing. My mom does it to me. She's the only one that's allowed to do that to me. Please do not bring in all your receipts. Total those things. In an audit, will the IRS or state want to see my records? Absolutely they will. In addition, when you guys are putting out receipts as a nonprofit, there is a sentence that you need to have on every single receipt. All of you should write this sentence down. There are no goods or services that were exchanged for this contribution, provided for this contribution. I will send you the exact wording out for that sentence, but it needs to be on every single receipt. If someone makes a $20,000 contribution to your nonprofit, and that sentence isn't on there, and they get audited for that charity, they just lost that deduction. Without that sentence being on their receipt, you may not deduct that charitable contribution. Every year I get giant contributions from clients who are deducting things where they gave contributions to their church. Every year I call many, many church treasurers and say, you need to put this on your receipts. Every year I've got one that doesn't do it. And every year, people stop making contributions to that particular treasurer. How long do I need to keep my records? Best practice? The correct answer on the CPA exam is 7 years. The Arizona requires by law that you keep everything for a minimum of 4 years. I say keep everything forever. With technology being what it is today and with scanning records and all of that stuff, there is no reason why you shouldn't keep all of your records forever. A 25% understatement of income can happen very, very easily. It could be one contribution that got used immediately, so it flowed into the corporation or nonprofit and flowed right back out for a special project. Let's say that we were building a playground, like what happened Grace Church in Cerrito. They've got that playground that's in dedication of Will. So all the money flowed into the nonprofit account, all the money flowed right back out to build the playground. It could be easy to forget that on a tax return if you weren't keeping your books on QuickBooks, right? Now that's a 25% understatement of income. The IRS considers that fraud. It's also easy to do on a personal return. Let's say that I pulled $40,000 or $50,000 out of a retirement account because I wanted to pay off my house. Well, I didn't do anything fun with the money. It's really easy to forget about that 1099 that I should have had coming in the mail. Now I've just committed fraud on a tax return by making a simple mistake. They can go back 6 years now for 25% understatement when you weren't trying to do anything. If you've got net operating losses on a business, they can go back 20 years to determine the origination of that net operating loss. They have, and they do. I've got 2 clients right now where we're trying to defend a net operating loss from 15 years ago. And my server crashed at the beginning of 2020. I don't have that data anymore. So it looks like we're going to be paying out an awful lot of money to cover these people's tax bill for the last 15 years because we didn't do a good job of backing up our records. It cost us an awful lot of money. Tax returns keep indefinitely. And that's where we're at. So what questions do we have right now?
No questions. Really, really good information.
Good. I know Janelle's got questions.
Yes, please ask Janelle.
You're muted though. We can't hear you.
I know. It took me 10 clicks just to unmute myself.
There you go.
That tells you how slow my questions will be. I mean, just letting the information sink in. I mean, I feel like I'm the little hamster on the wheel, just trying to let the information sink in. I mean, I'm back at playground intake to build that Grace Church, and then having that penalty and being it, you know, considered fraud because you just didn't add that in. So my questions are, I'm sure, going to come in real time as I'm trying to do something. So just trying to absorb the information, Chad, is really helpful to me. Going back over my notes. Will we be able to get the slides?
Yeah, you're going to get the slides and the video.
Excellent, because I know that reviewing it for myself will be helpful. I can only absorb so much, blonde by birth.
And I am taking some pretty good notes, Janelle, too, that so we can share some of the, you know, the most applicable stuff to the board tomorrow.
Right, like making sure that every single thing we want to do is listed.
Yes.
I mean, that to me, that's like, okay, all hypotheticals, possibility, things like that. So thinking big and thinking big goals, but we don't want to overextend ourselves in even that process, right?
For sure.
Right, and your bylaws are very important. You know, I don't know if you guys have a set of bylaws, but you can go on and
I have to
download.
set, we have to tweak them, but yes.
Okay. You know, so those bylaws are really important as well. As you have, if you've got a 2-year term as president or a 1-year term as president, you have to turn over. You know, one of the things about nonprofits that I'll say also is you don't own a nonprofit. You are a board member of a nonprofit, but if you're serving your term, you might be able to go around the secretary and the treasurer and the president and the vice president positions, but at some point you're going to be off the board. And you need to keep in mind that that board can make their own decisions and you know, might not do the things that you like it to do. There's a hospital in Phoenix, what, 2-3 years ago, and they had a stale board. They were losing money and couldn't figure out how to generate revenue, generate profits. So they went around and found community leaders all over Phoenix to come and participate in their board. And the board, after 3 meetings, shut the hospital down. And that's not what they were looking to do. They were looking to revitalize the hospital, but the board can do anything that they want to do. So you don't own a nonprofit. You want to set up your bylaws to make sure that it's protecting the things that you want to do. If you want to have a foundation account, you know, and how much can be pulled out for interest and principal every year. If you know, you're going to serve a 1-year term or a 5-year term, or you know, how long can you lose money before it gets shut down? You know, blah 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 blah. All of those things need to be in your bylaws. And when you're setting up your nonprofit for the first time, when you're setting up those bylaws, you're setting up the entire future of that nonprofit. That's your share of the ownership, and it's really 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 important, because as soon as there's a new board on there, you cannot control personalities. You cannot control people. They're going to do what they want to do. If you didn't control them in the bylaws, you're out of luck. Angelica.
Just a quick question. Would you be able to provide that link of the public records that were available, the information? I actually work in public records at the University of Arizona, and so that's my area, and I'm curious because
For the Arizona Corporation Commission?
yeah, I guess you had referenced it earlier. I'm just kind of curious because that's just, I don't know, an interest of mine anyway, because it's my job, but also since I work in public records, I'm a little more familiar with public records law, but I'm just curious about other resources that I could look at, and how other people are doing, providing information.
Yeah, I will send that link to Anna, and I don't think Anna would mind disseminating that information for me.
Okay, I appreciate that. Thank
Not
you.
at all.
Thank you.
Anything else, ladies? All right, well, it's been fun. Of course, if you have any questions, comments, concerns later on, my email address is chad at TucsonCPA.com. Anna, of course, has all my information. So does Tina. If you guys have any questions, don't hesitate to reach out. I don't charge for questions. I'm not an attorney. That's it. You guys have a
I ask
lovely
him
day.
questions all the time.
That's true.
That is an excellent resource to have. That will be front and center, because questions come to my mind that I think are ridiculous, and someone else will say, okay, wait a second, that's a valid question, and here's your resources. And I love being able to have resources available, because there are far better thinkers than myself, and being able to access those thinkers is always a benefit. So thank you so much, Chad.
Absolutely.
Awesome. Thank you so much, Chad.
Thank
You're
you.
welcome. Have